welcome in. You're listening to the weekend edition of the Cortland Economics Report. I'm Al Cortland. Appreciate you joining. We are recording this entire program from the Cambridge House Investment Conference down in Indian Wells, California. I have to tell you, it's amazing how relaxed people are down here compared to when they do the shows in the blistery cold Northwest, what have you. I've got a very interesting gentleman with me right now who hasn't been on the show before, Frank Barbera. Let me tell you, he will be on the show very frequently from now on. Frank is a very interesting man. He has a newsletter that he started back in 1993 called The Gold Stock Technician. He was involved with CNN for a while. He was involved with FNN for a while. Very successful hedge fund manager. Just a guy who really knows this business inside and out, and I appreciate Frank joining us. Frank,
thank you so much for having me, Al.
Got a question. Tell us about, first of all, the newsletter, The Gold Stock Technician.
Well, it's primarily a technical newsletter. It follows the trend of the precious metals, gold and silver, also the major mining companies, the U.S. stock market, all of that with a global macro overlay. So we try to see what's happening in the broad economy, and then maybe with an eye towards helping people get an idea to when to be in these key investments and when to be out, because there is a time to be in cash. Metals and mining stocks are extremely volatile, and sometimes they can have very large drawdowns. And so we try to help protect people when basically it's a cloudy sky and keep them in the market when the sun's out.
Now, when you talk about the market, Frank, there's obviously exploration stage companies, development stage companies, advanced production stage companies. People can get involved in this particular sector by purchasing the commodity itself, bullion, coins,
Sure.
what have you. Are you involved in all of those areas?
We're involved definitely in the trend for bullion, also in all of the large and mid-tier companies, and to a lesser degree in some of the developing exploration stories. The exploration area is almost such a niche unto itself.
It really is.
It really is. That it's a little bit difficult to follow all of it, and be that precise. So we're really looking at companies that have producing assets, some development stage situations where maybe there's a well-defined, heavily drilled out ore body. That's the kind of thing that we'll take a close look at.
Frank, how did you get involved in the resource sector? I mean, most conservative stock players, for lack of better terms, avoid it. Why doesn't Frank Barbera?
Well, it's funny. Years and years ago, when I was at Financial News Network, I worked with John Bollinger, and we were looking at various sectors that could generate 20% returns. And if you look, because if you have 20% a year, and you double your money every 4 years. So we wanted to find the opportunity to make that high return, and there were only two sectors that did that every year: mining and natural resource, and biotech.
Isn't that interesting?
And so
wow.
The idea is, if you could be in the mining stocks for a few weeks, you could make your 20% and then go to cash, and go to the beach. And that's what got me involved from a technical point of view. But over the years, I've just gotten more and more involved from a global macro standpoint of view with gold and what is money and what is happening in the world with central banks and all this money creation. And I think that's just a tremendously fascinating story.
I have to tell you, we were having dinner last night with a fellow who's going to be on the show later, a very, very interesting guy, Simon Mihailovich. He's a Russian immigrant. He's been over here for probably about 30 years, graduated from Johns Hopkins University. Very successful guy, and my wife and I were chatting with Simon last night about his prognosis, for lack of better terms, as to the future of the U.S. economy and where people really should go to protect themselves. And this is a pretty conservative guy, as you are, and he's saying, you've got to be in precious metals right now to a certain extent, because he said, I don't see how the United States can get out of the conundrum that it's in.
That's exactly right, Al.
I agree.
The U.S. has a staggering debt load. Talking about a national debt at 15% and an annual fiscal deficit that's 10%, basically 10% of GDP. You can keep this up for a while, but eventually you're going to run into the same sort of problems that beset Greece. And right now, with the entire Treasury yield curve actually at negative real rates, below the rate of CPI, I look at that as essentially a prescription for a much lower dollar, and I think that's where we're going next. The dollar could start to tumble as central banks are in here reflating and printing a lot of money. So that's bearish for the dollar.
I would ask you a question about that, and I certainly don't disagree with you, but the question that I would ask, Frank, is that right now the dollar is, with all of the turmoil that's going on in Europe, with all the turmoil that's going on around the world, the dollar is considered to be the best of the worst, and consequently we're seeing a strengthening dollar right now. And I guess my question is, I don't see that lasting forever, not even close, and that's apparently what you're saying also.
Well, it's very interesting because if you look at the dollar chart, Al, what you're saying is exactly correct. We have seen a period of about 6 or 7 months where the dollar was very strong. It was sort of the least ugly among the currencies. But right now it's starting to look like it might be rolling over into a brand new downtrend. And I think for investors this is very important because this could light a fire underneath things like gold, silver, and the mining stocks, especially the large cap mining stocks, which is right now a big focus.
Well, and here's a really interesting question along those lines. We have an election coming up here in November, basically because of the education that Congressman Ron Paul has given the electorate in terms of what the situation is really like in the United States right now. And I know he doesn't have the majority convinced, but there are a lot of people right now who share the same philosophy that you
absolutely.
and I do. Yeah, and I guess my question is, I think the president's going to get reelected, and the reason I say that is because I'm a pretty staunch conservative, but we don't have anybody running against him. Now, my question is, if President Obama, in fact, is reelected, I'm not really sure that's going to be real great for the economy. What do you think?
I would have to agree. I think right now you're not seeing really aggressive spending cuts coming out of Washington.
Spending cuts? I'm not sure that they can define spending cuts.
That's the primary goal right now. The U.S. has to cut spending and really tighten up that fiscal ship, and right now that's not happening. I don't think a new Obama administration will do that either. So you really have a prescription there for more of the same, which is this structurally high unemployment, and probably now, because we have these negative real yields and a lot of money creation, a lower dollar. And I think that's really the goal, is let the currency fall, kickstart through monetary inflation, some inflationary pressure, and hopefully if you run inflation at 4 or 5% over a period of a decade or more, you'll knock down the value of all that outstanding debt.
Well, you have to hope that's going to happen. It's interesting. I don't mean to close on a sour note, and I certainly don't think this is a sour note, because my investing is just fine. I'm pretty comfortable with it, and I know that you are for yourself and your clients. But I would have to say right now that I have never seen economic times like these as tumultuous. I, quite frankly, have never seen political times as tumultuous as we have right now. And let's throw in strike three, and that is, I have never, ever seen the international turmoil that's going on right now in my life. And I've been around a lot of years.
It's true. That's really true.
Any one of those things, I think, could really cause some problems.
That's right. Well, the Iranian situation is an issue with the oil price at $100. If you look historically, spiking oil prices have induced recessions in the past, 6 of the last 7 times. So that's a bit of a wild card. But I think for the moment we'll probably get through this year without real trouble on the geopolitical front. Instead, I think what you'll really find is a lot of this reflation that has happened in just the last 10 weeks. The ECB has lent out almost $1 trillion. That's finding its way into the capital markets. It's providing a flood of liquidity that's going to underpin equities, and I think we'll see a bull market in mining shares and maybe oil service stocks as well.
I would agree with that one 100%. Listen, if you guys want some more information about Frank or his newsletter, simply click on his picture, which is on the website accompanying this program. I've got to tell you, Frank Barbera is somebody who you need to become familiar with. Stick around, you guys.